Hello everyone. So today onwards we'll start with these revision lectures for semester 5, and today the topic selected for discussion is investment accounting, AS study. I hope all of you have gone through the earlier material which was shared on investment accounting that included basic notes and some of the earlier questions and answers which we had done. So I'm not going to going into the theoretical aspects or basic discussion. We'll directly start with revising a couple of sums. And today there are two questions. Both are from Mumbai University's recent question paper. Okay, recently they had conducted same FA examination. So both these questions are shared with you, and we'll start working on it. Okay. So let's have a look at the first question. It's about accounting for shares, investment accounting for shares. We are given the data for financial year 21-22. On 1st April 21, there is opening balance 8,000 shares whose book value is 15 rupees a share. Then there is a purchase on 10th of April, 16 rupees a share, 4,000 shares are purchased. There is a right issue on 31st August, and the ratio for right issue is given. The investor has partly subscribed to the right issue, and then part he has renounced. So we'll see what is the accounting for renunciation of these shares and investment. And then subsequently there is a dividend declaration in the month of September, and there is a sale of shares in December. Okay, so these are the basic transactions. We'll start working on it. Just a minute, somebody is waiting in the lobby. So let's prepare the format, usual investment account format. All of you do this format, and then we'll start with the ledger. Your columns are date, particulars. We'll need face value column. Instead of interest, we will have dividend now. This is a share. Investment value, the cost or sales value as the case may be. Similar columns on the credit side. So prepare the format, and then we'll start. If you're ready with the format, please tell me. We'll start posting the data. We need some working notes also, as we have done in the past. Excel file visible to all? Question as well as solution which you are working on. All of you are supposed to join with your SIS EDU ID. Next time onwards, I'm not going to spend time on adding the guests who are waiting in the lobby. If you have SIS email ID, you can directly enter the lecture. Today I'm doing that, but next lecture onwards, ensure that you have your SIS EDU ID and you're joining with your SIS EDU ID. Because this will unnecessarily waste a lot of time in adding the students every time. Are you ready with the format? Can we start? Yes, can somebody respond?
Yes, sir.
Yeah, so we'll start then. Okay, so 1st April 2021, we have the opening balance. Let's start with the debit side. April 21, balance brought down. We have 8,000 shares, and the face value per share is 10 rupees per share, as you can see in the question. So 8,000 into 10 is the total face value. And dividend column nil. And the cost of investment is given separately as 15 rupees a share. So investment value will be 8,000 shares multiplied by 15. So cost of investment is 1,20,000, whose face value is 80,000 rupees. All of you post the opening balance. Okay. Everybody has got the opening balance in place? Yes?
Yes, sir.
Okay. Then moving ahead, on 10th April there is a purchase. 4,000 shares are purchased at a rate of 16 rupees per share. Our entry will be investment account debit to bank, 10th April. Bank. We have purchased 4,000 shares. So 4,000 into 10 is the face value. Dividend column is nil. And the pricing of these shares, market value 16 rupees at which these are acquired. So 4,000 multiplied by 16. 64,000 is the total purchase cost. Entry is investment account debit to bank account. Now going ahead, there is a right issue and the date of the right issue is 31st August 2021. Now the ratio given is 3 shares for every 12 shares. So let's do some working for this right issue. Taking notes, first is a right issue. Right issue is happening on 31st August 2021. Now on the date when the right issue took place, okay, we'll have to find out how many shares do we have in our hand. Let's find out that. On the date of right issue, if you see this data, our face value of shares is 120,000. So that means we have 12,000 shares of 10 each. Okay, so I'll put here number of shares held 12,000. That is the face value of these shares 1,20,000. So 12,000 shares of 10 each. Now the ratio of rights is 1 share. It's actually 3 shares for every 12 shares. Rights ratio is 3 shares for the ratio. The number of right shares will be 12,000 divided by 12 into 3. Eligible for 3,000 shares. The investor is going to be eligible for 3,000 right shares based on the ratio. 3 shares for every 12 shares. Now, has he subscribed for all the shares? The answer is no. It says he has subscribed only for part of it, and 1/6 of the entitlement was sold off, was transferred at 2 rupees per share. So these 12,000 shares he had, he is eligible for 3,000 shares. He did not subscribe for all the shares. So what he did, he partly subscribed. So for and then transfer right entitlement. It says 1/6 he has transferred. Okay. So 1/6 means 1/6 of 3,000. 1/6 of 3,000 he has transferred, and he has subscribed for the remaining, that is 2,500 shares. So that's how he had transferred 500 shares. He did not subscribe, but he actually subscribed for 1,500 shares. Okay. Has everyone understood this calculation? Yes?
Yes, sir.
Is the calculation clear
But sir,
to
will you
everyone?
explain this again? Transfer of right entitlement.
Yeah. Yeah. He is eligible for, he is holding 12,000 shares. Everybody is clear on that? Yes?
Yes.
Okay. Now for 12,000 shares, he will get certain number of right shares. The ratio is given as 3 shares for every 12 shares held. So if you want to calculate the number of shares, it will be 12,000 divided by 12 multiplied by 3. That's how he is eligible for 3,000 shares. Has everyone understood this?
Oh, yes, sir.
Now he has a choice. What are the choices before him? Either he can go and pay 3,000 for 3,000 shares and get all those 3,000 shares. Whatever price the company has offered, if you check the price is 15 rupees per share. Okay, so he has an option either to buy all those 3,000 shares, subscribe to 3,000 shares at 15 rupees per share. Another option for him is somebody else would be interested to subscribe to these right offers. So if someone else is interested, he can transfer this right entitlement to that another person and get some premium out of it. So the question says he has transferred 1/6 of the entitlement. He is eligible to get 3,000 shares. 1/6 of that is 500 shares, which he did not subscribe.
Okay.
He transferred that benefit to somebody else. And then for the remaining ones, 2,500 shares, he has actually subscribed. Okay. So for this transfer of right entitlement, he received 2 per share. Okay. And here he has paid 15 per share. For 2,500 shares, he will pay at 15 rupees per share. And for transfer of right entitlements, he will receive 2 rupees per share as a transfer premium. Okay. The question is clear on that he has received 2 rupees per share for that transfer. Have you understood these details? Yes?
Yes, sir.
Okay. Now there are two different entries for this. One is what he has subscribed. Okay. He has paid 2,500 shares ke liye 15 rupees per share. So that amount we'll have to calculate and we have to pass the entry for that, and the entry will be investment account debit to bank account. So let's pass that entry first. This is on 31st August. Investment account debit to bank. Right shares. This is only for your information. Right shares, what I have written. Okay. 2,500 shares multiplied by 10. So face value is 25,000. And the pricing he got is 15 rupees. So 2,500 into 15 is what he will pay, which will aggregate to 37,500. So entry will be investment account debit to bank 37,500 for purchase of these right shares, or rather subscription to these right shares. Have you understood this entry? Yes? Are you clear about this entry for investment? Can someone confirm?
Yes, sir.
Yes. Okay, fine. So this is one part of the entry. Now the second part of the entry will be sale of those right entitlements. So we will see how we can take care of that. Now for sale of right entitlements, how much he received? He received 500 into 2. That means he has received 1,000 rupees. That will be a separate entry. I'll write the entry here. Bank account debit to right entitlement. So for this, he will receive 500 into 2, 1,000 rupees. And check this, this will not affect your ledger of investment. Okay, this has got nothing to do with the ledger of investment. This 1,000 rupees is a pure profit that will finally go to profit and loss account. This income will go to profit and loss account. So entry is bank account debit to premium on sale of right entitlements, 1,000 rupees. Have you understood this entry? Shall we proceed? Yes or no? Confirm. If all of you have finished, then we can proceed. Sampada, can we proceed? Yes, all of you have finished?
Yes, sir.
Okay. So let's proceed with the further information. We have accounted for rights, we have accounted for sale of right entitlement. Now let's come to the next part of it. Next part says that he has received now dividend on 30th September. The dividend declared is 20% for year ended on 31st March 21, and the same was received by him. Okay, so let's see how we can account for this. Now if you see the details, he has got 3 different lots of shares. Okay, we'll plot these details. Okay, dividend received. Okay, balance, then okay, he had opening balance 1/4/2021, then 10th April he purchased shares, and 31st August was a right issue. Okay, now number of shares we'll plot here, or rather we can plot face value also, because dividend is 20%. So value here on 1/4/21 is 80,000. Then purchase, this is the face value, and right, this is the face value. Now it says the dividend will be received at 20%, and that dividend will be on face value. Okay, 20% for the year ended on 31st March 21. So dividend at 20% on this. Dividend at 20%. Now this will be eligible for dividend. This will also be eligible for dividend. I'll tell you the reason, but this will not be eligible. Not nil, and I'll put the comment here. I'll explain this and type out the details. Now see here, he was having 80,000 shares having face value of 80,000 on 1st April 2021. On that, he will definitely receive dividend of 16,000 rupees, which is 20% dividend. These shares are eligible for dividend because he was already holding those shares on 1/4/2021, and this will be treated as a revenue receipt, because the dividend is for the year ended on 31st March 2021 and he was already owner of these shares on 31st March 2021. Then on 10th April, he purchased the shares whose face value is 40,000. So 20% dividend will amount to 8,000. Now, since he has purchased the shares on 10th April and the dividend is paid on 30th September, he becomes eligible for this dividend also. So he is due to get dividend of 8,000 rupees. But the only difference here is this will be considered as a capital receipt. Now, why capital receipt? He became owner of the shares on 10th April 2021, whereas the dividend is paid for the year ended on 31st March 2021. So this is known as a pre-acquisition dividend. And pre-acquisition dividend, when he was not the owner, will actually reduce the cost of your investment and therefore it is a capital receipt. And on the third lot of shares, the right shares, these were allotted on 31st August 2021, whereas we are talking of dividend for the year ended on 31st March 2021. So since these shares were not in existence on 31st March 21, you cannot pay dividend for that particular year on these shares. These have come into existence only when these were allotted on 31st August 2021. So this part of the share, the right issue which was made in current year, they will not get any dividend for the year ended on 31st March 2021. Have you understood these three aspects? Pre and post acquisition dividend? Yes? You understood or not? Yes, anybody? Is the concept clear to everyone? Hello? All of you write down the note first and then tell me if it is clear, not clear, whether there are any difficulties. Write down the note. Once you complete the note, please tell me. Shall I proceed with the accounting?
So please can you repeat the third one? Why it is not eligible?
Okay. What is the date of allotment of these shares? I'll ask you a couple of questions. You only give the answer for your question. Okay. What is the date of allotment of these right shares?
Allotment.
Date of allotment.
Uh,
राइट शेयर कभी राइट इशू आया कभी अलॉटमेंट किया है ना
on
बाजू में डेट लिखा है ना
31st August
31st August 2021. Okay.
21.
Now the dividend which we are discussing about is for the year ended on 31st March 2021. Got it?
Okay, sir.
Okay. Now, were these right shares in your balance sheet or in existence on 31st March 21? Yes, I'm asking
Yes.
you a question. These shares, were they in existence on 31st March 21 or were they shown in your balance sheet? Is the answer yes or no?
Yes, sir. It is shown.
How can it be? If the shares are allotted on 31st August 21, how these shares can be in existence or in balance sheet on 31st March 21, which is before this date? A share will come into existence only when it is allotted, issued and allotted. So prior date, it will not be there. So how can you pay dividend on those shares which are not there in your balance sheet on 31st March 21, which are not in existence on 31st March 21? Are you getting my point?
Okay, okay. Understood.
Okay. So this is the only dividend that you will receive. Now the entry will be bank account debit to dividend and to investment account. So let's pass the entry on 30th September. By bank. Dividend received, whatever is your revenue income, that is 16,000 will be here, and 8,000 will reduce the investment cost. So your entry will be bank account debit 24,000 to dividend account 16,000 to investment account 8,000, because this is a pre-acquisition dividend, and pre-acquisition dividend will reduce the cost of these shares. So it will be credited to investment account. 8,000 rupees stands credited to investment account. Have you understood?
Yes.
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 So all of you complete this entry, and then we'll take up the next adjustment. Now coming to the next adjustment, sale. In the original question in the university, this sale was not there. I have slightly modified the question and added the sale. The sale is happening on 31st December and 2,000 shares are sold. Okay, so let's find out the weighted average cost. Let's find out the profit loss, and then we'll go to the accounting for this. One more working note we'll have to do. This price will be 2,000 multiplied by 25. So selling price is 50,000 rupees. Now we have to find out the weighted average cost. Okay, so let's average cost. Okay, we have number of shares, we have opening balance, we have purchase, and we have rights. There are three items here. Opening balance was 8,000, purchase was 4,000, and right shares were 2,500. We will also plot corresponding cost. These are the cost related details for shares with us. Now this cost is actually reduced to an extent. Okay, why it is reduced? Because we have pre-acquisition dividend, so it is credited to investment account, you can see. So let's how much is the pre-acquisition dividend that we have received? It's credited here. It's 8,000 rupees, as you can see. This will reduce the cost of investment. Okay, so net balance. So that means we have 1,500 shares. Okay, and the cost is 2,13,500. This is the data for the calculation of weighted average cost. Have you understood this data? Yes. Have you followed the details?
Yes, sir.
Okay. So weighted average cost we will reduce here now. Whatever is sold, to that extent proportionately we will reduce the weighted average cost. Just a minute, I'll need a couple of more rows. So how will you reduce the weighted average cost? Your calculation will be 2,000, sorry, 2,13,500 divided by total number of shares, 14,500 multiplied by 2,000. This will give us weighted average cost. 2,13,500 is total cost of investment. Then divided by 14,500, which is the number of securities in hand, and multiplied by 2,000, which is the number of securities sold. Okay. So accordingly, we can find out weighted average cost. Your weighted average cost is 29,448. So we are making the profit. 20,552 is the amount of profit that you are going to book for. All of it, write down this working note. I'll wait for a minute and then we'll go ahead. Complete this working note. Shall we go to the accounting if you have finished the working note? Yes. Can we work on the accounting part?
Yes.
Okay. So our first entry will be for sale and there will be separate entry for transfer of profit. So on 31st December 2021, there is an entry for sale bar tab. We have to enter the face value. We have sold 2,000 shares. So 2,000 multiplied by 10. That is the face value. There is no question of dividend. And our selling price is 50,000 rupees. So bank account debit to investment account is an entry for recording the sale. And then on the same day, we have to transfer the profit. So the entry will be investment account debit to profit and loss account. This is the profit. What is the profit on sale? Our calculations will tell us what is the profit on sale. 20,552 is the profit on sale. So two entries we have passed. Bank account debit to investment account 50,000, that is for 2,000 shares, face value 20,000 sold at 25 rupees a share. And then second entry on the same day, investment account debit to P&L account, profit on sale 20,552 is the profit transfer to profit and loss account. Now this is the end of the year, so we will have to close both dividend account as well as investment account. So let's do the total part. First we'll close dividend account. Dividend account will be closed by transferring the dividend to P&L account. Now our dividend account shows we have received dividend of 16,000, so that will be transferred to P&L. The dividend account stands closed once you transfer this income to P&L account. This is the income for the current year. And then in investment account, we'll have to carry forward the balance. So we'll find out what is the balance. Balance carried down. Now we have face value 1,25,000 and corresponding cost is 1,84,052. Face value, shares carried forward, 1,25,000 and cost of these shares is 1,84,052. For all the details now. Dependency from the working note which you want to complete or ledger or everything is fine. Yes, any questions, any doubts in this? Now we can do one cross check here. Okay. Year-end cost. Year-end cost per share will be 1,84,052 divided by 12,500. That is the number of shares which we have. Comes to 14.724. Year-end total cost 1,84,052 divided by 12,500 will give you year-end cost per share, which comes to 14.724. Now, if we get the same cost here, then that means our calculation. Because after this, there is no purchase as such. Okay. So weighted average cost, if you calculate here, 2,13,500 divided by 14,500 shares. That's that. 14.724. Our year-end cost is also 14.724. That means our ledger closing is correct. Closing balance has been correctly arrived at. This cross-check I had told you also when we discussed the topic in the beginning, that you can cross-check your answers. If there is any mistake in posting, balancing, whatever, you can probably identify that mistake through this method, through this cross-check. Okay. Have you understood the sum clearly? Yes, any difficulty in this sum? Yes, any difficulty, any more clarity required?
No, sir.
Okay. So,
No, sir.
fine. So this was the first question that we have tried. Now the next question also I'll show you. We may not do it today, we'll do it in a subsequent lecture. Okay. You can try if you want, otherwise we'll definitely do it in the next lecture. Next question is about investment accounting in government bonds. Okay. We have done similar type of sums here earlier also. Here the only difference is interest is being paid 4 times in a year. We have done the sums where there was annual payment of interest or there was 6 monthly payment of interest also. Here it is quarterly payment of interest, and that may have some implications when you do the calculations, etc. Transactions are just few, only 3 transactions are there, but interest payment is every quarter basis. So if you want, you can try this sum. I already shared the question. Otherwise, we'll do it in the next session because there is no point in hurrying it together at one go. We'll definitely need about 45 minutes for this question also, because there is a sale, there is a purchase, there is opening balance, and then 4 times interest payments. Okay. So we'll reserve this question for the next session. Okay. Are you okay with this?
Yes, sir.
Yes.
Fine.
So will you share that sum in the group?
Question I have already sent in the group.
Not this solution part first.
Solution I'll share. Solution I'll share. Afterwards I'll share solution. Okay.
Okay, sir.
But question I have already shared. I'll share the solution. Not a problem. Okay. So let me stop the recording and download the attendance, and then we will part for the day.